So the moderator of the third session is the first deputy of the governor of the Bank of Russia, Mr. Sergey Shevtsov. Good morning to you all. I would like to start the session with congratulating the insurance industry. It is the holiday for the Bank of Russia and the rest of us, because if we do not sell the insurance industry products, at least we buy them. So let us congratulate them on their professional holiday. So today we have quite an interesting subject. On one hand, we will be discussing on how the business models will change under the influence of the FinTech developments, and we will also discuss what role the Bank of Russia will be playing to make the services and products accessible. It will affect how the products will be sold at the markets. Let me introduce the panelists. For you, we do not have that many of them. They will be able to have their say. I would like to say a few words about them. Let me start with Alexander Afanasyev. Moscow Exchange was the first FinTech startup because in 1992 the listings to buy and sell stocks were inscribed on the blackboards, and that's when it started. But in 1993, the e-platform was launched, and while the foreign exchanges were receiving the orders from the brokers were receiving it in paper, the Moscow Exchange was already digital. It is one of the high-tech organization at the Russian financial market, and Alexander is in charge of it, and I think it is the leader with respect to the high-tech used. Next panelist is Mr. Vadim Kulik. Many praise the products that are offered related to remote services, and he is the ideologist of those products and the risk manager and the person who has been developing those products, though he does not work for Sberbank now. And I think we will see the lucky entities that will have him. He will be able to introduce the state-of-the-art technologies. So he is both the theoretician and the practitioner. Next panelist is Mr. Sergey Solonin. He was introduced yesterday already, and he is an innovator. And if we believe what Sergey Tinkov has said, he said he is just a salesman. But if we believe him, then Kiwi platform is one of the key fintech companies at the market. And the last but not the least is a representative of the consulting industry, advisors. We cannot do without them. And it is Mr. Sorin Telamber, who has been for many years, and it is 15 years, dealing with fintech business models, process optimization in the finance industry. He represents Oliver Wyman company, and we will start with him. He will be the first to have his talk. He will share his futuristic vision of Oliver Wyman, what players will be emerging and what will be dying. So what is the future for us? Mr. Sorin, the floor is yours.
Спасибо большое, Sergey.
Thanks a lot, Sergey. So today I would like to tell how the digital technologies change the finance market in Russia. We can see that today traditional FC model is vertically integrated. What is the meaning of it? Banks develop their products, they have their clients, customers, and they use their own systems. In the future, that kind of model will exist for some time. At the same time, it will have some small share of the income volume. Why so? Because there are new players emerging at the market, and what is more important, there are new business models emerging which are different from the conventional brick and mortar model. So what are these new emerging models? First, we have aggregators, and the business model of the aggregators is very clear for the customers. All the information on finances could be aggregated at one point, and the different proposals could be offered for the customers, so that the customer is able to make his choice, to take the pick. At the same time, we have integrators, which are not financial companies, but at the same time, they have a lot of customers who want not only to use their financial services, but to receive cross sales at the financial market. And we can see that there will be more competition with respect to the front offices, because that's where most of the value for most of the company is generated, because and that's where the customers would be coming, and that's where the companies would earn their money. When we talk about middle office, of course, the banks and the companies would be developing different products in the middle office. At the same time, there are new players. These are B2B players whose specialty is the solutions on the digital risks, risk appetite, or different other technologies. When we talk about back office, we can see the development of their banking platforms. What we mean is that such players as web services will be providing infrastructure services, and the banks would be able to switch over from their own platforms to the institutional platform providers. And we will be talking about the infrastructure solutions that could be implemented for the banking community on the whole, under the auspices of the central bank and business association of FinTech will be quite instrumental in it. Let us view what are the business models existing now, the incumbent business models, and what is their potential in the future. Reference the aggregators. First, we have brokers. And in some countries, in the UK, for example, and for some products in the insurance industry, for example, they are the major channel of sales. And there's a major challenge for them. Like in Russia, for example, it is unlikely that large state-owned banks will be participating in such platforms. They would like to maintain a close relationship with their customers. So there's a standing risk that that kind of brokers are moving in the direction of the mass segment. If we regard the corporate sector, a good example of the aggregator is the exchange. We think that most of the products that are more or less transparent would be traded at the exchange, B2B sector. I think there were large expectations in the West that B2B will affect the banking sector. That has not happened yet, And the only country with large exchanges was China, the facts. But the situation is different in China, because deposit rates in China are very low. That's why the customers have been looking for the investments that would be more profitable. In Russia, there's no drastic reduction of the interest rates, and so the demand for that kind of products will be still low. When we talk about the other aggregators, it is the companies that aggregate all the financial information of the customers in one place. It is very valuable for the customers. Like the example is Credit Karma in the US. That kind of aggregation services are free for the customers, and that kind of customers could aggregate and attract large database of the customers. Another example is robo-advisor. Originally, there was a huge hype associated with this company, but at the same time, there are costs associated with attraction new customers, and unfortunately, that type of customers do not have good future, bright future. There's a good potential for that kind of companies in Russia, but much depends on the regulations. If you have BIS 2, then the transaction costs are much lower. If the customers are allowed to make money transfer from different banks virtually for nothing, and if there is a direct access of such services through open API to the banks. And another example is ERP systems. In different areas, it could be retailing, sales, purchasing, and what's good about them, they are already inbuilt in the corporate systems of the customs, and it will be quite easy to aggregate banking products for them. Much depends whether the banks will be ready to do that. But if that kind of partnership relationship between the banking community and the high-tech companies, FinTech companies are established, the business model might be successful. Let me wrap up. Finishing, the integrators are the FinTech companies such as Apple, Facebook, WeChat, etc. These companies have a large database of customers, and they can easily complement financial services. It could be financial services of their own, like Alibaba or JE, or the financial services provided by their partners. We think that in Russia, it will be primarily the services, financial services from their partners. We see that in Russia, Telegram is going to build their own bank, and Model Bank is working with Yandex. There is a wish of some banks to develop their own ecosystem. There is Kulik. They develop a search engine for real estate to meet the demand of the customers, and of course then to sell the financial services like mortgage services, loans services, lending services, etc. Software services are under development as well. There will be tech companies like Digital Risk, RigTech. What entities will be providing that kind of services? Primarily, it will be large banks. They develop these services for themselves, and why not sell it to the others? and there might be a consortium of different banks, private banks. If they cannot invest on their own, then they will unite their services, and they can create bot of their own or digital risk solutions platforms. For that kind of companies to become successful, it is very important to have access to data. If they use external data only, then their advantages versus the companies who have access to the client database will be less and less in the future. I mentioned that back office, Amazon Web Services is a good example. They've been developing very fast in the past and less in the banking sector because banks would like to keep their own infrastructure. But in the future, it is clear that the costs will be too high. The economy of scale for such providers is large, and they can compete with the banks. So I think in the future, banks could switch over to such systems, and some individual startups are set up like Telex, and they are developing the banking system. It's sort of bank in a box. And there are other platforms that could be developed under the auspices of the central banks, that they are enablers. They are facilitating the development of the other systems based on them. And the last thing, what will happen to the banks? When we refer to majors, the potential is high for them. What is the reason why? First, they have large customer database. They have high price of brand, and unit costs are low. They can if they would be able to transform themselves, because they are behemoths, it is difficult for them than flexible small banks. But still, they will be successful. There are new business models, and state banks could embrace those new business models, not necessarily new banks. And there will be many business models, and there will be less players, and that will affect the competition at the banking market. The situation for the private niche bank, the situation is much more difficult. If we exclude Gazprom Bank, then the potential for the small banks with respect to the development of the platforms is lower. Either there will be some kind of merger of those banks, or consortiums for the banks where they together would develop technological solutions to compete with major banks. Online banks have high potential, but I think they will still be niche banks, with the exception of Tinkoff, because they have first mover advantage and relatively large customer base. Their advantage is they are small, they are flexible, they can develop new technologies, and what is more important, they can form partnership with the other partners. I have mentioned module bank, Yandex, and it is a good example. And Yandex has got a database, and Module has got products. And another thing, onliners. Their activity is focused around products. It is important for them to be specialized, and it is important for them to sell it through different channels, like through marketplace, direct channels. And it is important everything could be used based on their expertise. That's about everything I wanted to tell now. So summing up, making a resume, I can say that the banking system is getting more modular. The conventional model vertically integrated is still there, but it does not cover the whole pool of income. That is the situation now. Thanks a lot. Thanks, Soren. Unfortunately, you did not make me happy saying that the prospects of private banks in Russia are twice worse than for the state-owned one. We would like to see the light in the end of the tunnel, but if I understand you right, to be successful, we have to be a state bank. Now we present the initiative of the Bank of Russia. Do you have the clicker? Yes. This initiative is aimed at supporting the competition of the financial market to give a chance not only to the large state banks to be successful and sell their products. The market in Russia cannot develop without competition like anyone, which is based on the capitalistic mode of operation. So it's not only the initiative associated with finance accessibility, but it is meant to increase the competition at the financial market. Initially, the banks would bring in their client, and they would connect their clients with the lack of possibility to transfer money. In 1775, there was a monopoly for client. It started in London, and that kind of relationship with one's own bank persisted for a long time. And only end of the 20th century, people realized that they can have a few banks. A private bank emerged in the Russian Federation, and the deposit guarantee system emerged, and it changed the banking products. And some things that it is banks that sell deposit, but they sell the insured deposit, but it is just the price of the banks is different. And so that's the kind of situation when people getting the income and they realize that the income amount exceeds the insured amount. The people realize that there are many banks, and the banks started selling the products of the other companies. Insurance products turned up at the market, and the monetization makes it possible for the bank to have 0.9 of the products, 1% given, 10% given to the insurance company.
They have learned to monetize physical networks, and now in the era of digitalization, it goes from assets to liabilities. When people are linked to brands, led to banks desiring to become exterritorial, and there are barriers to this movement preventing banks from taking the place they would like to take when people can get products from Kaliningrad banks or Vladivostok banks while sitting at home. Tinkoff has invented a delivery system within 2 hours. Some banks continue to operate their physical network, but in order to go away from a specific bank and enter the marketplace, what it takes is an exchange with clients not querying various dealers for quotations. They are all aggregated by the exchange, and this is a different technology. Now, it is often questioned whether this situation is not a repetition of the dot-com crisis, but the difference is that people are prepared to buy online and via their gadgets. It was not the case then. Are there technological prerequisites for it? Yes, they are already in place. There are big data technologies, robot advising and blockchain technologies are developing along with other techniques to manipulate data, and consumer demands are expanding. The Z and Y generations do not want to waste their time visiting banks or insurance companies, and they view personal data differently. Whereas for the X generation and the boomer generation, their personal data is something they're not prepared to share. For the Z and Y generations, this is something they don't understand, and they are ready to share their data. As regards suppliers, this is a big question, how things are going to develop with suppliers and providers, and we will discuss this today. Are suppliers ready to sell via networks? A trusted environment. Law 113 was named a key factor preventing the advance of new technologies, and we are moving forward, and we realize that the task of protection against money laundering and terrorism financing is still there, but there are means to make it less complicated. KYC is a factor that the industry pays a lot of attention to. And lastly, an important factor is regulation, whereas technologies are regulated by the market, whereas regulation is performed by the government. But Russia is an exception from the general trend where the market develops itself. In Russia, the revolution is carried out from the top, where the regulator defines largely how the market can develop. We do not have the 300 to 400 years that Britain has had to cover that road, so we often replace evolution with revolution and try to stay ahead with modern financial markets by cut shorts. 71% of Russians are internet users, and Russia ranks first in the world in terms of the number of SIM cards. 51% have made purchases online, so positive experience of goods and services acquisition has been accumulated. There's no allergy to that, and 28% are active online buyers, which means that a third of Russians, and if you don't include small children and old people, then in fact, half of our population that can use financial services are active online shoppers. So prerequisites are there for a transition to a marketplace and B2B relations between the financial organization and the consumer. Now, the plug-and-play concept consists in the idea that aggregation into a platform enables a large number of players to abandon capex because financial organizations with huge capitals that do everything in-house without outsourcing, then big banks will always remain in front because they have the economy of scale, and small and medium players cannot afford a similar model. So we need to think about how to enable these highly competitive and low capex ventures to enter the market at minimal cost. May I remind you that Zuckerberg created Facebook with $1,000. He made software himself, but here it is impossible to enter the financial market with $1,000 or $3,000 in today's exchange rate. So the system needs to accept low entry players for competition to exist there. So we suggest setting up a national system of financial transaction registration. It should be complemented with remote identification and links with state services and the state tax authority. It will interact with payment systems, but the essence boils down to the idea that all the transactions in the financial market will be recorded at the same repository. But unlike the repositories of today, it will be the so-called golden source of truth. So a record that a service has been purchased with its characteristics will be legally sufficient to protect consumers' interests and their counter agents in the face of the Central Bank of Russia. And this national system will also bring our consumers to a uniform platform and a single place to relate to all other players in this infrastructure. So this environment should bring about trust on the part of the consumer, because they know that after some remote purchase, they can enter their personal office. They can make sure that it's there. Now, when we buy a movie online, we risk a small amount of money. And when we buy goods online, we don't spend a lot either. But in the financial market, if I have put all my savings into a deposit without visiting the bank's office, I really wonder whether the bank has received the money and what happens if the bank goes bust. So this environment is a key element of trust in this system. Next, what is also important is how this is going to be wrapped up. It's more likely to be smart contracts because they're not static. There are interest payments accumulated. And if this is an insurance product for life insurance, then regular payments are tracked. If it's a replenishable deposit, then it has a life of its own. So a smart contract is a very acceptable format here. And it's important for the system to have an open interface. It should enable both producers and vendors to sell their products and consumers to hook up to it. And there are two elements which are not in existence today. They are supermarkets preparing certain marketing programs and complex offers, and bots that perform as brokers on the part of consumers or on the consumer's side. The next question has to do with competition. One can make one platform and everything will go through it in the Russian Federation, but we know very well that one platform may have shortcomings. Its economy of scale, although it has economy of scale and uniform standards, but The lack of competition is a shortcoming, and although registration must be uniform, just like we have just one tax authority and we don't need to have competition in deposit insurance, the other elements must be highly competitive. So what are the highly competitive components that we see? The producers and vendors of financial products, bot vendors, depository systems and services, and supermarkets. And another question we're going to discuss is whether there should be several platforms or just one platform, just like the National Financial Transaction Registration System. As a result, the building of such a system and a solution, and depending on the solution to this question, we can come to different results. If there are several platforms, the bots that service individuals, an individual should have access to all the platforms. If there's one platform, then it will play by its own rules, and then the question will arise of the tariff policy, and the question will arise whether the platform will be tolerant of supermarkets or will it wish to create a supermarket of its own without sharing with all other market players. And then it has to do with people's awareness and readiness to work with a multitude of platforms, because there's the effect online when the habit of working with some platform prevails over the idea to search for others, alternative platforms, even if it means paying more. Now, as a result, these are the questions we would like to discuss. How will this platform influence the bank's business models? Which products will be covered by the new system? And then are there prospects in robo-advising, and the fact that the Bank of Russia, what is implementable in the Bank of Russia's offer to the market? Is it something that you should probably expect to create a lot later, and whether it is not better to make small steps? Well, I would give a definitive answer to this question in the affirmative. We have all the success components for it. And in one of your slides, one could see, well, they included such components as data storage, processing, and people who could do that, and there were certain cultural aspects. So if you look at that through the from the perspective of these three components, we can see that the cost of a unit of memory has been going down very fast, and this means we could store large volumes of data, and the cost of the infrastructure is going down. Now, the second part are algorithms. I would divide that into two parts: software as such for the platform, and the second part is artificial intelligence, or something that we need for bots to operate. So the technological stack, or the first component, as it is based on an open source, there's a stormy development of various components that are embeddable in those platforms, and in every class of solutions you could find tens of possible solutions you could use. Talking of bots and algorithms around them, As a matter of fact, although we believe it's some remote or distant future, it is near at hand indeed, and no one will be surprised by algo trading. As an example, it has existed since a long time ago. I think you've all tried a bot of some Russian or other bank. Such bots are operational. You could communicate with them. And Tinkoff mentioned yesterday the bots that are involved in conversations with the call center. So if this is in place, there are teams in this country that are developing these technologies, and maybe they are not numerous enough for the market to make disruptive leap forward, but still there are points of growth. So the technological components are ready. Well, technological readiness is just one aspect, so it means you can do it. And will it work? Alexander, what are the critical factors that should be part of this marketplace for it to be in demand? Of course, the regulator will never prohibit bilateral relations, and financial institutions will always have the alternative of distributing direct. Well, let me repeat. The first prerequisite is not technological, but information-wise. Since the emergence of the Internet, we have had it, and we can use this information online. Everyone has a gadget or several gadgets in their hands. What is missing for a large segment? Well, it's a good idea to put registration in place, and now Sergey made it the center of this ecosystem, just like earlier people thought that the Earth was the center of the universe, but then they saw that the sun was in the center. But I like the more contemporary approach that followed Einstein's idea that it really doesn't matter what you put in the center, and view everything else relative to it. There are two components that are missing. Registration, of course, because it means legal protection. We miss it in electronic systems because after making a deposit, after visiting an office, they receive some paper with signature. But if you do it electronically, there's some electronic trace left there. But I don't know what the court will say when they bring screenshots there. But of course, there are all kinds of electronic means of protection and the possibility of looking at your status from all perspectives. But apart from legal protection, what is needed is transaction. Not only the possibility of just seeing the opportunities offered by the ecosystem in terms of product value and price and players. You need to push a button, and that means you need connection to some payment system. And of course, registration is an important prerequisite. And then risk management. All the B2B systems are confronted with the problems that, on the one hand, all individuals want to disintermediate the chain of middlemen, where they mistrust and are afraid of money pocketed.
Because they don't know one another. And I think the successful winner would be the platform which will be capable to unite all those the things that I have mentioned: the information, the accessibility, the nice feel and look of the interface. But the platform that will include the legal protection and risk management against the failed payment and the transaction per se, because time is quite expensive now. Time is money. Thank you. I have a question for Mr. Sorin Talamba. Which players will be joining? Will the large banks will use that system, or only the small and the medium one, and the large one will stay in its paradigm? I think, first of all, it will be the small banks that will use that kind of system. I have already stated that a good idea might be for the small banks to set up some kind of consortium if they do not have a major share at the customers at the market. And I think the development of such platforms will be very useful. Large banks, of course, will be aspiring to develop a platform of their own to preserve their share at the market. But if there is another platform that will have good economic effects and the large banks will be losing in the competition, then the large banks will join the winning platform. So I think it is the process of two steps. Sergey, what's your opinion of it? How will your company consider the possibility of selling their products through that platform, or will it be the supermarket on this platform? Thanks, Sergey. What I believe in is that innovations on the whole are generated not in the hubs, not in the center, somewhere at the periphery of the activity, and the innovative products will be generated and built over there as well. And the banks will eventually become the platforms for such products, and our company is doing exactly that. We have a number of the products, and it is just the preparation of the products that could be imported into other banks. So on one hand, I could foresee the emergence of such products that could be on display in the banks, like in the supermarkets. And on the other side, I think that the banks would be gravitating towards the presenting themselves and open for such products. And nothing wrong with the registration system that could have both the fiscal functions and the functions of connectivity in the state environments where it is very difficult for the individual players to do. If in the transaction registration system, if it is the only one, there are many advantages, but the marketplace should be multiple. There should be diverse array of marketplace. So, Sorin, a question for you. Do you think competition is good, or whether it should be still centralization through the economy of scale, and there should be one system for Russia? I think competition is very important, and there should be plethora of the platforms. I'm in favor of the competition of the platforms, and then let the winner take it all. And competition is important, and that the core of the identification should be one for the country. That's what we are doing it in Russia, and the market understands how we should proceed. I think centralization is efficient where it can have positive results, positive deliverable, and additional value. So I think there should be one platform for registration, and we should think we should need some kind of ID card that should be linked to some account. identifying one individuals. As far as the platforms are concerned, I don't see any arguments against them being unique. Okay, talking about the products, deposit is a product, and it is guaranteed. There is an insurance for it, and I think this product is a good candidate for such a platform, and the third-party liability insurance is also that kind of product. What other products, what pioneering products could be sold through that kind of products? Or the question is wrong. It is up to the market what products to be sold through such platforms, and the regulator should not undertake any efforts to define the priorities. Sergey? Thank you. When brokers used to come to the currency market, the currency exchange market became available for the physical persons, and it affected the spread of the banks. Sberbank has been resisting, but they also surrendered. And it is actually marketplace. And it's up to the market, but of course we should set the limits. What is standardized is well adapted for these platforms, and if there are products that are not of mass demand, if these are customized, tailor-made products, they will still be provided by individuals. So we should sort of define whether the fridges or the washing machines be included or not. But box products, financial products, or music products, no difference if it's a box product. And I think in the future there will be an integration of the product platforms with financials, and there will be movement from the product platforms and financial platforms that would include some products. And it's just a matter of standardization of those products and the depository of the products. When it's securities, it is quite clear, but when it is fridges, then it's not quite clear how to have a mix of those products. I am for the freedom of the market, and it's up to the market to determine what's profitable and what is not. And the e-commerce versus platform, and my opinion is, of course, it is only human to save. Saving is important for men, but loans or credits were not a must for the people. What actually they needed is to buy a house or a car, to have the money to spend for education. And I think this part will be inbuilt into the product platforms, where the primary need of humans is met. Or there will be a merger between the finance and commerce products, but it's just a matter of who will be more successful and developing faster. Sergey, let me define a question for you. What do you think, in your perspective, important for the psychology of the customers to save time when buying a car, buy an auto loan as well from a limited number of the lenders, or price is more important? If people see that they can get a cheap car loan, they will be using that kind of service, and the integration of auto dealer with lender will be profitable. I think this example is not quite good, because if the larger products, price will be very important for customers, but the situation when their products and services are gravitating towards the point of interest of the client, and the payments like are gravitating into the messengers, for example, and I don't think there is place for banks in such a situation, because payments will be a generic products, and they will be made exactly where it is convenient for the customer to do. It is the high pulse products, and it will go to the applications of the customer's experience, everyday activity, and I don't think the banks will play an active role in that, and that's what will happen in the e-commerce. And e-commerce and offline platforms and payments will be impulsive and fast and integral part of buying products. And that's why I think the migration into this area will be real fast. Okay, could the marketplace exist in the financial services, which are not linked to the needs of men to spend money? Or shall we understand that it's a dead end and no investment should be made into it? I think for large buys like mortgage, we can compare offers. Once a website should be developed where the property would be searched for it, but the clients will do the compare. If the product is not commoditized and the banks have different banks have different levels of fees, then that kind of platform where the customers could compare offers could exist. Another thing that I would like to add, I think the integration between the integrator and aggregator is possible. If there is a travel site, for example, and so the traveler needs an insurance, and there should be a connection between such a company that is a travel agency with the aggregator that where the customer could check which travel insurance is better. So such a combination is viable. So on the slide that I have shown, one element should be introduced. It is the consumer of the money that is given to the customer to pay for certain services. So part 3 of our discussion is related to financial literacy and robots. Internet is efficient and it is in high demand thanks to such companies as Google, Yandex, and some other search engines. Just imagine your life in the internet if there are no search engines. It will be chaotic. Low level of financial integrity, and it's not only typical for the Russian Federation. We are no difference from the developed markets. The survey in Austria has shown that only 4% could explain how different stock from bonds is. It's not a difficult question for the audience, but however, that's what it is. It is a Sisyphus work when we spend a lot of money to improve financial literacy, but it still does not grow. And if we provide access to the bank where there is a limited number of choices, sales office clerk can explain well what the customer could buy. In the Soviet Union, there was no problem to buy sausage because the choice was limited. Right now, it is very difficult to take your pick from the diversity if you do not know what specifically you need. And so when man face a great number of brands, diverse array of products, they still have a demand, a need, at least to save their money. And if banks offers a deposit and the deposit of this particular bank, then the customer would give them money, and of course they can do the check-in at the aggregator and find the specific bank. But marketplace gives a choice of thousands of products, and could a human being make the correct choice of the different options? That's the question. And so advising is needed to help customer. And on the part of the sellers, it is the supermarket, but the task of the supermarket is to sell product. But the man does not always understand that the sales do not advise the individual, but because the task is to sell, not to meet the demand of the man. But there are intermediaries, the so-called bots on the internet. So I would like to ask a question: how robots could substitute the lack of financial knowledge, and whether humans can trust bots for decision making, and whether the bots could do any robo assistance and do the transactions on their own. What's your stance, Sergey? The direct answer now is no. For the time being, there are certain trends which are indicative of the fact that that might happen in the future. I believe that it would happen. I believe that it will happen when bots is something that the people got used to and communicating on a day-to-day basis. And there are two good trends in this respect. One, it is the trend for the new generation, millennium generation, and I think that kind of generation would easily switch to using bots and the machine helping them to take decisions. And another things are portable gadgets. I visited a demo, and new gadgets of augmented reality were presented, and I indeed believed then that telephones and computers and TVs will be something we do not need. It is voiced control, and when you use your voice, bots turn up, and then as a result, bots start to communicate with the platform solutions, and there is a trend to use platforms, and then there might be a situation when I go to the restaurant dining out, bots order a table for me, then they pay for me, and then there is another trend. Bots know about me more than I know about myself. They understand what is happening. Bots understand my preferences. They recognize me. It is the digital identity is very fast. It is the velocity of movement, voice instructions, etc.
So what may happen is the following transformation. If you look at it as an element of the financial range of parameters of the future, which may happen in 5 to 10 years, it appears there's some person around you every time taking part in your purchasing activities, and then your robo-advisor is a step toward financial competence. But in terms of today, if you imagine a bot that will place a large amount of money within a certain limit at a certain interest rate and with proper insurance, it will enjoy some demand on the part of certain people that want to place their money in several banks. But this is still a thing of the future. So far, I can see bots that certain companies use, and we do chart procedures with bots. Large-scale transition will happen when generations change and when new devices replace what we are using today. I can hardly imagine a demand for calculators that would compute the tangents of an angle. I think the point, the idea is for a bot to take away the need for being financially competent rather than teach it. But maybe I'm wrong. Well, there may emerge financial bonds, and big banks that have their popular brands can attract deposits, but in that case, no one will take their money to them. How do you see a new reality where everyone can use bots to make a competitive choice? What will change in the bank's policy? Well, there will be quite a few pieces of bad news for the big players if such bots become popular. Of course, you could make them simple enough. You could make them more intelligent and smarter. They will track what's going on in the market and will visualize offers to individuals and their owners and even ask them if they want this or not. There will be several ways of embedding bots in people's life, but the news for big players in terms of deposits are bad, but for several reasons. Firstly, the players incur costs of creating their platforms and channels, and now they will face the question of what to do with that, because when a bot could be purchased by anyone and the bot will start offering choices between bonds and deposits under 1.4 in medium-level banks with different rates, then what will the big players do with their low deposit interest rates? And in this paradigm, big players will see their margins shrinking, and the capex they've incurred will exert pressure on it. So for big players, it's bad news. Thank you. Alexander, in your practice, you are faced with FHT traders using algo trading, and sometimes there's an error when an algorithm makes a mistake, leading to the loss of money owned by a user. Now imagine that we have bots behaving more or less in the same way, and if there's some news coming to the market, they take account of it. For example, people try to get rid of some securities on a massive scale. So what are the tools for bots to behave differently? I may disappoint you, but when some news takes place, non-bots behave in a similar way too. Investors are greedy, but they are easily scared, and they are collective being. And there are different bots. Some follow algorithms and speed trading, but it's a different matter if you discuss bots that can create a long-term portfolio. But there should be big opportunities for such a portfolio. But those that have big portfolios are traditionally more inclined to their family offices, or they receive expensive but high-quality human advice. As regards the the way in which bots could be regulated. The first HD traders, as individuals, they began to operate algorithms, and no one could imagine what could create out-of-the-box algorithm solutions that could be sold to others. But now such ideas are emerging, and this may continue to develop. As regards risk management and preventing panics or some other ideas, unless there's one algorithm, but I don't believe it will emerge so far, neuron networks of the bots are not as developed as human, and they may be less subject to panic. Now, you are a financially competent person. Would you trust your financial well-being to a bot? Well, what I would do, I would aggregate all my accounts at one place. I think it's valuable information. Secondly, I would listen to the proposals by a bot, but I would make my own decisions on where to invest. So you're going to spend your own time to manage your finances. Yes, I will still do that myself. Well, it's obvious the financially competent people will be the last to trust themselves to a bot. Now, as regards financial competence, as technical solutions appear in our lives, do we need to continue and make people acquire some financial competence at schools or elsewhere? Financial competence means trust in the market as such, because there's a big divide between the deposit maker of yesterday and today's bond investor, because it's a different account, a different set of documents, a different psychology, a different world. It's more likely a broker's world than a banking world. The traditional link with the bank disappears here, so financial competence will be of great help here, and nothing will replace it. I will modify my question. Maybe you could add such knowledge as what a blockchain is and how it works, so that people are not apprehensive that what they have bought for a token will fly away. How does, or do we need people to know how machine learning works? Because what we need for people to know is not just how investment decisions are made. I find it difficult to imagine a human being with an advisor on the phone, and I don't think that following that anyone will start reading or research. People do not read their contracts, even the beginning of those contracts, and they just sign them. And if you have purchased a bot, they will just try to understand who this bot represents. And if it's a state platform, that makes it unnecessary for me to know anything. I will just push the yes button all the time. This is what it will look like. Thank you. Now, Sergey, I believe that while there are fraudsters, financial competence needs to be spread and encouraged. There will be bot advisors along with bot fraudsters, and a bot can only highlight options and risks. I don't think fraudsters will go away. They will continue to exist, and they will offer provocative products and will continue to try to take money away from the population. So we need to work along that path. We do a lot for it. We make school training curricula on financial competence, but maybe you could add something technological to it so that people don't just know the basic concepts, but also feel familiar with technologies that will replace a part of that knowledge. Well, technology in education should take its place generally. Literacy, digital literacy is an absolute necessity, and programming in the broad sense and familiarization with the digital environment is a must for schools, along with knowledge of the Russian language, and that will help people familiarize themselves with what is going on. Now, may I make an addition? Yesterday, when I was when Mr. King was showing a movie on Capital One, it was about voice recognition, and Sergey mentioned it too. So at present, the best way of biometry, the best channel of fake biometry or forging biometrical data is voice. And even Rostelecom showed dual bio-identification with voice and simultaneity between lip movements and voice. This is better protected, but voice alone is really something you can forge easily enough. Soren, what do you think? If we see bots arriving on the horizon, do we need to enlighten and educate people and give them any financial competence? I am sure we need to do that. It's not being done sufficiently well at schools. You can regard bots as a means of raising people's literacy, financial literacy, because if you aggregate your accounts and if you can get some advice or explanation from a bot, that will be that will take some understanding, and it may not only be for adults. Those bots may not only advise adult people, but there could be even bots for kids that will teach them new concepts. Now, I'd like to highlight the idea of trust. Why financial competence or literacy is needed is because you could double-check. There's a robo-advisor that is nice to talk to, but what they recommend is exclusively on the basis of algorithms, and the people receiving this advice, they believe it's a hybrid. In reverse, they believe that they get some electronic advice, but there's a human being behind it who turned an algorithm into this electronic format. So it will take time for people to learn something and to see that what they have learned is indeed in line with reality, and it's not just crisis and fraud. Well, I would like to state my own point. When in the late 80s we were taught basic life skills. Now, we were also taught some basic car repair operations, and it was believed that the competence of mechanic is inseparable from driving. When we studied computer science at school, we were told what a processor unit is, and we would disassemble a computer. But now, if you ask me what's there inside an iPhone, I don't think anyone will explain that, and I don't think that Apple company is interested in people knowing that. But people are lazy by their nature, and if a person trusts a calculator in computing a tangent, they are not going to look into how this is done. So if people are sure that the bots are competent enough and do things well, they're not going to be interested in why a bot makes this or that decision. Just like whereas earlier they would pick a car based on their in between repair life, and now they are no longer interested in that. They are interested in the maximum speed or its parts, its interior. But I'm afraid that by analogy with that, the bot revolution is going to lead to something else. And now my last quick round of answers, and then we'll take questions from the audience. The emergence of such a marketplace, will it have a positive impact on competition among banks, insurance companies, brokers, and so on, or will this competition will be too bloody and lead to a degradation of the market? Alexander, of course, I don't quite see what you mean by positive in this case. If banks try to become brokers and some uniform price is established for the entire market, it's good for the consumer, but it's painful for others. Could you repeat your question? How will this system influence competition? Will it not be too bloody? Won't we come to a situation when the scope of the market will be much lower than the opportunities to make money? The competition will become tougher because market entry and the cost of market entry will shrink considerably. You won't have to incur a large part of the costs. There will be more players, and it will be difficult to compete in prices. That's why competition will increase. Sergey, I believe competition will increase quite certainly, and small players will find it easier to enter the infrastructures. And I believe that the FinTech Association, well, we are creating elements of this common banking infrastructure, and it's the choice of the banks themselves. We realize very well that it's inevitable for us to move in this direction, and we had better do it ourselves than wait for others to make the choices for us. So I'm all for competition. I believe the future belongs to it, and the banking system is over-concentrated today. So a platform is needed for access to smaller players.
Sorry, didn't you change your opinion that major banks will be the winners? First, I would like to state that the competition will be tougher. It is good for consumers, but at stage 2, there might be one platform which is better than the rest, and it might be captive. Who will own it? It's just a question mark, but it might be owned by a large state bank. Thank you. Okay, colleagues, we have finished our discussion. I can take 2 questions from the floor. Yes, please. Any microphone in the hall? Hold on a minute. Just hold on a minute. Everything looked fine. I liked it all, but Sergey said, and all the people who are in favor of competition sort of agreed to that. But Sergey said, namely, hold on a minute, regulators define how the market will be developing. He said revolution from the top. And everybody said, well, yes, it's okay. But actually, he announced monopoly for development. And I think the market won't be developing if there is no understanding how the market is developing through market, not regulated by the regulator only. And another thing, we are talking about the products that that man has invented. And we are not talking about the products that AI will invent and design for us. And I think the central bank should start thinking about it, because how they will register it. Because if my AI of the private company will invent, you will have to invent your AI to have it registered and regulated. Okay, it's a philosophical question whether from top to down or from down to top. Not all the regulators have mandate for the development of the market, and the central bank is one of the regulators that are tasked with developing the market. I don't know whether it's good or bad, but I am just describing of how it was in the past years, and market is participating in the development as well, but the regulator is proactive, which is not typical for some of the jurisdictions. That's what I meant. And but that could help to accelerate the development of the market. It's a philosophical question, what's good and what's bad. We can discuss it separately. Any other questions? Looks like there are none. Thanks, colleagues, for your stamina to find an opportunity to be present here on Friday from 9 in the morning. I think it was instructive and interesting as well.